SpaceX, OpenAI, Anthropic, three of the most anticipated IPOs in recent years. And one of my members just asked me a really interesting question. Should we be worried at the huge IPOs that are planned to come to market soon? And they will be appearing in our world index funds with high valuations. So they will enter ETFs in high valuations. And his worry is, should we sell, should we limit our exposure to passive investment funds for the time being? And if they fail, will it be like dot-com boom and bust? So really interesting questions. And many people are also asking me whether they should invest in SpaceX IPO directly and whether this is even possible if they live in Europe. But before I answer, I need to show you something that happened to Facebook investors in 2012. Because if you don't understand this, you might make a very expensive mistake. Now, Facebook was the most hyped IPO of its time. This was in 2012, and everybody wanted to get a piece of the pie. Facebook was a famous company, everybody used Facebook, it had great potential, so everybody bought this stock at 38, that was the IPO price. And investors were buying. Now, what happened next? Let's check the chart. After IPO, the stock price went from 38. In the coming months, it went to 18. That's minus 50%. Minus 50%. And investors who were buying at an IPO price of 48 were panic selling at minus 50% and losing a lot of money. Now, Facebook was a great company, but the IPO price was simply not okay. And in the short run, it didn't work out. Now, of course, if you are a long-term investor, and if you don't care about short-term volatility, and if you survived this volatility, it was not a problem. Why? Because Facebook price, or Meta price, now the company is called Meta, is now around 600. So if you were buying at 38, that's a pretty good return. Now, does this mean that SpaceX, OpenAI, and Anthropic will crash after their IPOs? Well, nobody knows for sure, okay? But it's important to understand that anything can happen and that you should not bet your house on the outcome. Okay, now let me answer the first question. Should I sell my ETFs before these high valuation IPOs hit the market? And my answer is very simple. No, absolutely not. And here is why. When you own an ETF, you do not own one stock. You own a big basket of stocks. If you own a global ETF or an S&P 500 ETF, you own hundreds of big global companies. So even if SpaceX or Anthropic eventually enter your ETF, your whole portfolio does not suddenly become a bet on these companies. Think of it like a fruit basket. Your ETF fruit basket has hundreds of pieces of fruit in it. And if someone adds one very expensive pineapple to the basket, it does not make the whole basket overvalued. That is simply because that pineapple represents a tiny part of that basket. And apart from that, companies do not enter major indexes on the day they go public. It is not like IPO on Monday and it's in your ETF on Tuesday. There are certain rules. The company must usually be large enough, liquid enough, and there must be enough shares available for public investors. And some indexes also require that the company is profitable. And, for example, SpaceX is not profitable yet. So even if SpaceX goes public at a huge valuation, it may take months before it becomes part of major indexes and ETFs. And when it enters according to size. If SpaceX becomes 1% of the index, only 1% of your ETF will be represented by SpaceX stock. So, even if all their starships explode, all their satellites self-destruct, and Elon Musk quits and becomes a monk, and this company goes to zero, your ETF will only fall by 1%. And that is nothing because markets can go up or down by 1% on any normal day. And here is the best part. ETFs are self-correcting. If a company succeeds, its share in the ETF grows. For example, if it starts with 1% weight and becomes hugely successful, its share can become 3%, 5%, or even more. And this happened with super successful companies like Apple, Amazon, and Nvidia. And if it becomes just an average company, or if it fails, its share will simply shrink. When you own ETFs, you do not need to guess which company will win. This is the power of broad ETFs. They will always own some expensive stocks. They will always own some companies that disappoint, but they will also always own the big winners. And of course, this is very different from putting, for example, 30% of your net worth into one hyped IPO. If you do that, that's gambling, because you never know what will happen in the world of investing. Investing is all about probabilities, and thinking in certainties has already destroyed many investors' lives. If you think, oh, this will certainly happen because my fortune teller told me so, it's a recipe for disaster. Because it may happen once, but the next time you put too much money into an investment and it does not go according to your plan, you might end up losing too much money and then you might never recover. So, now you understand the mechanics. ETFs follow stock indexes. Indexes include different IPOs over time, so this inclusion takes time, and each company represents just a small share of the ETF. And ETFs automatically adjust over time and give more weight to the winners. Now, if you appreciate this kind of investing content, click like under the video and also subscribe to my channel. I create videos for busy professionals who want better returns without short-term trading or taking excessive risks every week. So every week you will get a new video from me. Subscribe to my channel. But there are still two big questions that I didn't answer. Should you buy these IPOs directly? And if you live in Europe, can you even get in at the IPO price? Now, before we dive into these topics, let me answer a second question my member asked me. If SpaceX, Anthropic, or OpenAI fail, will this be like dot-com bust? And I understand why he is afraid of that. Back then, investors were excited about the internet, and today they are excited about AI and space technology. Back then, companies came to the market with huge promises, and it's the same today. So yeah, there are similarities. But here is the key point. The dot-com bubble did not happen because the internet was fake. The internet was real. It did change the world, and it created many big winners in the stock market. The problem was that investors at that time paid crazy prices for weak companies with no profits, no clear business model, and sometimes almost no revenue. Back then, if your company had .com in its name, people thought it had invented a cure for cancer. And that is not the case with SpaceX, OpenAI, or Anthropic. These are real companies with real revenue and huge potential. Yes, of course, there is a risk that they could fail, but this is the risk with any company. And like I said before, your ETF will own them only as a very small part of a broad basket, maybe 1% or 2% at most. So if these companies become the next big thing, you will probably want more exposure to them anyway. And if they fail, they will not affect the ETF price much. Now, before I give you my final answer, if someone you know is thinking about selling these investments because of these IPOs, share this video with them. It might save them from a very expensive decision. So, should you sell your ETFs because these companies may go public at crazy valuations? And my answer is no. Because if you sell, you are making too many predictions. You are predicting that these IPOs will be overpriced, that they will be entering indexes quickly, that their stock prices will go down sharply after that happens, and that you will know exactly when to get back into the market. And this is not investing, this is gambling. The bigger risk is not that you own ETF that has a small piece of these IPOs in it and that might be overvalued. The bigger risk is that you abandon a good long-term strategy because the media told you these IPOs are overpriced. I talked about this in detail in my video titled "The less you do, the richer you get, why lazy investing wins." The link is in the description. And now let's take a look at the next question. Should you buy these IPOs directly? Of course, this is not a professional financial advice. I'm not a financial advisor and I don't know your personal situation, but I would be very careful. Owning a tiny slice of these companies through ETFs is completely different from buying the IPO directly. This is where the Facebook example becomes useful again. Facebook was a great company, but the IPO price was a terrible entry point in the short run. The stock dropped almost 50% in the coming months after the IPO. Now, I'm not saying the same thing will happen with SpaceX or OpenAI. Maybe they will go up after the IPO and they will not come back. Maybe they will go down, nobody knows. But here is one important point. If you are an ETF investor, you probably think long-term. And if these companies become truly successful public companies, they will most likely become part of the major ETFs anyway. So you do not need to chase them on day one. The simplest solution will probably win again. For most retail investors, especially in Europe, access to these IPOs at the IPO price is very limited. There are some brokers like Trade Republic who offer IPO access, and Kraken is offering an option to buy tokenized SpaceX stocks at the IPO price. But in all cases, allocations are not guaranteed, so even if you express interest there, you might end up with no SpaceX stock in the end. And probably most investors will be in that basket. Now, retail investors usually get access to these stocks only after the stock starts trading, when the price may already be much higher. And chasing price is almost never a good option. But don't worry, if you simply own broad ETFs, you will become a long-term investor in these companies anyway. And if they grow and succeed in the long run, you will benefit through the growth of your ETFs. Just like ETF investors benefited from Nvidia. They didn't need to predict Nvidia perfectly. They did not need to buy it before everyone else. They simply owned ETFs. And Nvidia's huge growth helped push these ETF prices higher. And that is the beauty of a simple long-term strategy. You don't need to win the IPO lottery. You just need to stay invested in the companies that win over time. And you do that automatically by owning ETFs. Now you understand why selling your ETFs because of these IPOs would be a mistake, and why chasing hyped IPOs directly is usually not the answer either. But knowing what not to do is only half the equation. The other half is having a clear system, knowing exactly what to own, how much risk to take, and what to do when the next scary headline shows up. And that's exactly what I cover in my free 90-minute masterclass. I will show you the simple investing framework that I and my 8,000 members from 73 countries are using. The link is in the description below. If this video helped you, click the like button and subscribe. This channel is for busy professionals who want their hard-earned money to work for them and not for the financial industry. So if you want to build wealth without watching the charts all day, subscribe to the channel. See you in the next video.